A very good afternoon, good morning. Welcome to today's online trading webinar with myself, Giles Coughlin. Guys, hope everyone had a good weekend. We have had more exchange of missiles between Iran and Israel over the weekend, sadly. However, sentiment is picked up because there's, Trump saying US and Iran should make a deal quickly. There was a report on the wires this morning that a top Iranian diplomat has revealed that Iran's military and political leadership are prepared to give up uranium enrichment to preserve the regime as they need a face-saving solution. And if you just take a look around markets, you can obviously US equity futures are higher. So you see the currency space risk on. New Zealand Aussie dollar up. New Zealand got GDP data out this week, and Aussie's got Labour data out on Thursday. The dollar's a bit weak. You've got the FOMC meeting on Wednesday too, and you can just see US equity futures all higher. Yeah, sure, absolutely. Dead useful, this currency meter. Let's see where to share. Where do we share this? Copy link, sharing on. There it is. Yeah, you definitely want that. The European equity futures up, China's up, everyone's up, volatility down. So it's good news in terms of sentiment. Bond yields were higher. They're now finding some bids, but it's two-way market in the bond market. Silver's pushing its way higher, and we were looking at that silver upside. You can see here that hammer reversal bar that we've been looking at here. Yeah, now that's kind of almost like a that is also almost like a flag pattern on the hourly chart, isn't it? Let's just get rid of those Bollinger Bands for now. But you can see that's almost like a flag pattern here. So there's a few different ways of seeing that. Let's just see. On balance volume is weak, but nevertheless you got that strong hammer reversal bar on the daily. Right. And if markets can close above this level here, then that does indicate price is ripe for a bit more upside. So keep an eye on that. Quite nice. We also had a nice stock move higher in Oracle. Another flag pattern. Najam up, pull back and away. Just one for you. The rest of the currency, see gold's just pulled back. Unusually, dollar's weaker and gold's weaker too. We got the dollar weaker. This is interesting. Yeah, Najam, there's lots of technically strong reasons for buying silver. That Bollinger Band breakout system is quite interesting as well. Strong buying everywhere I look at silver. The Dixie dropping lower. Now that's interesting because we saw the dollar strengthening on Friday, and even with oil up, right, the dollar's pulling back today. So that tells you that sell the US dollar narrative is quite strong. Now oil markets, just worth quickly looking at. You can see that they're pulling back now. Just quick summary of what's going on with oil markets. ING had some report on this. If Iran has about 3.3 million barrels per day that comes online, about 1.7 million barrels per day is exported, right? So oil prices surged on the prospect of Iranian oil not getting to market. However, it's still getting to market, so it's pulling back. If Iranian oil supply is definitely stopped, then what we could look for is oil up to $80 per barrel. If the Straits of Hormuz is blocked, then we can look for oil up to $120 per barrel. So the kind of no-brainer trigger is, Iran blocks Straits of Hormuz, then buy oil. Okay, that's just the go-to situation if that happens. Otherwise, oil might pull back if there's no problem with supply. Okay, then oil might can just pull back. So at the moment, that's just in line with that sort of positive mood that's out. It can change in a heartbeat, we know that, but that's the current sentiment. Copper finding some bids, iron ore finding some bids on that positive sentiment. That's helping lift sentiment for China, and major currencies higher on that weaker dollar. Now, in terms of the calendar, it's light. There's hardly any data out. We've got the 20-year bond auction happening at 6 o'clock. Bond demand has been fine, particularly foreign bond demand. There's no sort of big sell America theme coming on in the bond market, so that's positive. We're in the blackout period. The Fed's meeting on Wednesday. There's no particular Fed speakers on the wires, so it's light in terms of calendar. No top tier data. We've also got Trump meeting in the G7 at 3:30, and then we've got Trump speaking with Canadian PM Carney at 4 UK time, so towards at the end of our session. And then we've got Trump speaking again in the G7 Leaders Summit, and obviously that bond option. Also got some oil option expiries coming up in later this evening at 7:30. So is there a lot going on? Not really. It's going to be sentiment driven, and let's have a look here. So expectations of the Fed this week is that they're going to keep interest rates unchanged, and that remains the situation. The only thing is that the higher oil prices go, that can impact the Fed interest rate expectations as well. So they're more likely to hold higher for longer because oil's seen as inflationary. Oil's used transporting goods, producing goods, manufacturing goods. So when oil prices are higher, costs go up everywhere. That's the theory anyway. It doesn't always work out exactly, dollar for dollar like that, but certainly in terms of the sentiment and the mood, that's how it goes. So looking around, what do we see? So for the first hour, we see price move up towards, last week's value point of control, and pushing up to this value area high. So we've moved up to this value area high, finding some natural resistance. We've had price inventory being positive throughout the European morning session. And crucially, we're pushing above these trap sellers here. So this becomes a buy area. Definitely if we get down to 5985, that becomes a strong buy area, this 5985. You see, because you've got those sellers trapped there. So any dips down to here, strong buy area, I wouldn't be adverse to buying anywhere like around here. The 6,000 would be a great area to buy. Stops could be running under the 5980. So you can run a 20-point stop there quite happily as just a standing order in the market. Looking at the 15-minute chart, okay, again, what do we see? We see this nice value area high from Friday. That price, should price move back into that area, you'd expect buyers. Okay, and also we got sellers there, and if buyers can push above these sellers here, then we've got a potential run up to 60.28 and beyond. So that's worth looking at, and in fact I will be keeping an eye on that for the open. And if I get buyers pushing above those sellers here within the next 5 minutes, I will take that as a buy and just buy at market with stops underneath the standard deviation. Okay, and I will go for that. Otherwise, I'll be very happy to buy in from any drops down to this value area here. Fine, no problem at all. And I'll run a stop sort of underneath the lows of this area, maybe underneath these buyers down here. So that will be a 15-20 point stop. Fine. Just adjust my position size respectively. So projections either from here up and up, right? Here through this area, up that area, that would be a projection, or down, up, down, and buyers from here or here. Headline risk is going to be there. I'm expecting buyers. That's my bias. And the squawk is on, and anything different, I will of course let you know. Looking at this on the 15-minute chart is what I'm going to be starting with. Obviously 6,000, big number and a good opportunity for buying, and it dips down to this 6,000 there would just be a great buying opportunity with the current environment. So what I'm looking for here, okay, I'm going to start getting ready for this, is buyers trapping sellers here. Now, looking at the average true range, we're about 5.21. So if I get buyers trapping this, I could look for a, roughly double ATR. So I could look for a roughly 10-point stop. So if price close above this, then I want a 10-point stop, and that was 609. That would take me down to 6,009. That would be back down to this level, which would be sat underneath these guys here. So that would be fine. Yeah. So I'll be looking for that. So 10-point stop. and that would leave me with 10 micro contracts would be about $500. So let's see. I'm going to see if I get these buyers trap these, and then I'm going to enter in 10 micro contracts with stops at the 6,009. So let's see, because it would be these buyers trapping these sellers against this level. Sentiment is positive. I'll be looking to run that into the open, see if I can get up to 60.25 from the get-go, and take it from there, folks. All right, here we go. So that's with those sellers are trapped there. So you've got predominant buyers coming in. So buyers are dominating, and you can see that the delta is positive. So that means I'm looking for an entry in at 6,019. Okay, 6,019. And I'm then looking for stops running 6,009. That's what I'm looking for. Buyers have managed to win out this battle for now, and look, and now they're trying to break out. So this is an attempt of a breakout on the 1 minute chart.
Market update after the US cash open. For US indices, they do open in the green, starting the week on the front foot. S&P 500 up 80 basis points, Nasdaq 100 up 1.1%, Russell 2000 up 80 basis points as well. In terms of sectors, they do open mostly in the green, healthcare being the exception, marginally in the red, while tech, financials and communications lead the gains. With regards to trade updates, the EU Commission is prepared to accept a flat rate US tariff of 10% under clear conditions.
Okay, enter the long here. I'll explain it after the score.
Meanwhile, the latest US data concerning the New York Fed manufacturing for June did worsen more than expected, weighed by a fall in new orders. In terms of FX, the dollar is weaker, and for the weekly calendar ahead, central bank meetings are the highlight, with the BOJ expected to hold rates overnight. In terms of the move, though, the dollar index just below 98 as strength in euro, pound and yen do weigh. In terms of fixed, the curve is entirely in the red, albeit losses are modest. And now we do look to the 20-year note auction later today, where the amount is 13 billion. And concerning crude, there has been a ton of updates over the week. And concerning geopolitics, on energy, Israeli drones have targeted a number of energy assets, forcing the shutdown of a production platform at the world's largest gas field. Kepler's Amina Baker said there are no signs of disruptions in oil loadings from Iran. She did add that without a supply outage, there'll be no need from anyone to add more barrels onto the market. And as it stands, the crude prices have now wiped out their earlier gains, currently down about 80 cents per barrel. WTI trading just above $72, Brent at $73.50.
Okay, so the reason for this long is you got this slight pullback, a kind of flag pattern that's a bit morphed, but you got this strong buying, pullback, breakout on volume. See that volume breaking out? So happy to try a speculative long, because I've got this resistance area that's potentially going to challenge me. And I'm
update from the BCB. Does sell $500 million in dollar auctions with repurchase agreement.
And obviously, if I see these sellers getting trapped, then I want to exit. All right, so those buyers
the
get
Russian
trapped.
Foreign Ministry says that Russia is discussing Iran with the US.
Right. So I'll use that as an exit, just see if I can get a bit of a pullback on price, and then use it to exit. Right. So just use that little pullback to the point of control to exit, and now looking for fresh positioning. You see those sellers are going to trap those breakout buyers, so it's a bit of a false breakout.